Hi, it's now the 13th of August. It's 10:30 Central Time. Futures down 16 points, as you can see on the board to my left, 17,350. And if the time was ever right or ripe or justified for a substantial, serious correction, that time is now. 17,350, I think we will all look back on as a fantastic level to have gotten short at. These sudden, sharp rallies that we've experienced are typical of a downtrend, not an uptrend, and I am calling the market lower. I stake my reputation on it, and we'll see what my reputation is worth shortly. Good luck to you all out there. Take care. Oh, you know what? Instead of that, let me give you some background as to why I feel that this is fantastic time to be short. Number one, the breadth of the market, which is the number of issues advancing less the number of issues declining, has been in a downtrend now for quite some time. While the markets continued higher, the breadth continued to get worse. While the markets continued higher, macro data has continued to get worse. While the markets continued higher, bond yields have continued to decrease. Normally, if the market's going up, bond prices are going down, which means that the market price and the bond price generally move in opposite directions. Bond prices increasing mean that bond yields are decreasing. So if the economy is improving, then you would expect bond prices to be picking up, bond yields to be picking up and bond prices to be decreasing at the same time as the stock market goes higher. The stock market has almost tripled from its lows of '09. The media continues to portray the economy as improving slowly. I don't think it's improving at all. The unemployment numbers seem to be improving, but it all depends on what you measure. The unemployment rate, keep in mind, only measures the percentage of people who are actually looking for work. It doesn't count people who have given up looking for work. It doesn't count people who are educated and yet have menial jobs that don't require an education. I just feel that the flood of easy money that central banks around the world have unleashed has disguised the extent of the recession/depression that we're on the edge of or in the middle of. And I point to commodity prices, specifically oil, which today actually traded down under 40. It's currently at 40. I'm showing it at 41.98, but there was a flash crash earlier today where it did trade under $40 a barrel. A way of looking at oil might be as the price of energy in the system. So if the system is slowing down, then you would expect the price of energy to similarly be decreasing. If you look at the '08-09, it's called the subprime debacle or the stock market crash, however you quantify what happened in '08-09, the fact of the matter is oil plummeted from, I guess, close to 150 down to right about where it is now. I'm of the belief that the economy is so bad, and I don't mean the US economy, I mean all economies around the world. China's stock market has been in such a free fall that the government there has gently threatened to have short sellers prosecuted, or I'm not really sure what the ultimate penalty in China is. It may be to appear in the bodies exhibition. In any case, the fact that stock markets are falling, the fact that commodity prices are plunging, lumber, copper, Copper used to be called Dr. Copper because it was thought that that was the leading indicator as to actual economic activity. The stock market, though, has blindly continued higher in spite of all of these flashing red signs. I can't really believe that with all the negative data that we've had, that we're still over 17,000. We're almost at 17,500. So I'm calling it right here. 17,356 on the September Dow Jones mini contract. I think the top is in. I think we head lower. I think we're heading a lot lower. Be careful out there and take care.